Hello. Welcome back again. My name is Aaron. For those who are here for the second time, welcome back. And if you are here for the first time, also welcome. Today's session, it's a live Q&A. So we're carrying on from where we were last week. Last week, remember, we were doing personal tax for South African musicians and artists. So yeah, for those who are here for the first time, and then yeah, we also have like a YouTube channel, and to follow the channel, it's the YouTube handle is Aaron King, and then also when you're at that when you are there and maybe you have not subscribed yet, please remember to click on the subscribe button. So in that way, you will be able to get any future videos that we post, like this one as well. And I know all of you who are on Facebook, you're on the right page, which is Aaron King Crochet. And thank you for coming through. And I really appreciate it. And I hope you are all here to learn. Before I go to questions and answers, I just want us to just recap on what we did last week. Remember, last week we went through 6 steps on how to calculate your personal tax. The first step is that you have to gather and calculate your gross income. Gross income, remember I said it's all your income. If you are a musician, it's going to be obviously your gig income, your rehearsal fees. If you are working for a church, the salary that you get from the church will also be included in your gross income. Then step number 2 is that you're going to deduct from that income your deductions. When we're referring to deductions, we mean all your business expenses. Like for example, if you are using your own car or using the company's car, the petrol, that will also be a deduction. Your telephone costs also be a deduction. Actually, any business related expense will be allowed as a deduction. So you'll have your gross income less your deductions. Then from there you will get your taxable income. And then from your taxable income, then you'll calculate your tax amount. And remember, the first thing you have to check as well before you calculate your tax amount is that, like I said, there's a threshold of 79,000. What I mean by that is that if you earn or if you have a taxable income of 0 to 79,000, which is 6,500 per month, if you are an employee, you do not have to pay tax. But then if you are running a business, whether your income is below the threshold, you still need to file your tax return. That doesn't exempt you from filing your tax return because at the end of the day, you are still liable to file your tax return. But in that case, you will not pay any tax. But at the end of the day, you still need to submit your income because that income will also be used. For example, let's say if you go to the bank, and then remember you're not getting a payslip, for example. So the bank will ask you to provide them with your SARS tax assessment, which they call an IT-34. So that is why it's important to file your tax return, whether you are below the threshold or not, because by law you have to file. But then if you are an employee, for example, your employer would have filed an IT3, what we call an IT3A, because it's called an IT3A because there's no tax deducted. But if there was tax deducted, the employer will issue you with what we call an IRP5 certificate. That IRP5 certificate, that's what you will use to file your tax return. So those are the two difference. Those are the difference between the two. But remember, if you're an employer and then you're not registered for pay as you earn, for example, then you will not have the IT3A or the RP5 certificate. So that is why it's important for you to file the tax return as an employer. Then moving forward, I said step number 1 is you calculate your gross income. Step number 2, you deduct all your expenses, which we call deductions. Then from that amount, you will get your taxable income. Then from your taxable income, you will calculate your tax as well. Like I said, if it's below the threshold, then you will not pay tax. The threshold is 79,000. And remember, this gets updated every year in March. So the one I'm referring to now, it's for 2020. 2020, which is which is the period starting from the 1st of March 2019 up to 28 February 2020. So the threshold for that year is 79,000, which means if you earn 79,000 downwards, you're not paying any tax. But if you are a business owner or a sole proprietor, you still need to file the tax your tax return irrespective. Yeah. Then from there you less your rebates, which are obtained from the tax tables as well. So then from the rebates, then we get your tax payable or refundable. If you've made any provisional tax upfront, then maybe at year end you are in a position where you've overpaid tax, you will still get your tax refund. Yeah. So step number 1 is you calculate your gross income. Step number 2, you less your deductions. Step number 3 is your taxable income. You get to your taxable income. Then from a taxable income, you calculate the tax amount using the tax tables, which I'll show you now. Then from the tax tables, and from the tax amount, you less your rebate. The rebate is also updated every year in March as well. So your tax amount less your rebate will give you either your tax payable or your tax refundable. That's how you calculate your personal tax. Let's look at the tax tables again. Okay. Yeah, if you look at this table here, remember we are in 2020 now. Let me highlight. Yeah, we are in 2020. So these are the tax tables that we will use to calculate your personal tax. Then, as I've mentioned, the tax rebate 79,000 for now, which is 6,500 per month if you are an employee, or if you want to know how much per month is a tax threshold. And then from there you less your rebates, which is 14,220 for the year 2020. It's 14,220. Okay, I don't know if you want me to do an example again. Let's say your taxable income for the year, it's 120,000, which is worked out at 10,000 per month. So your tax will be calculated as follows. Remember, this is now your taxable income. And remember, I said from the taxable income, you calculate your tax amount. Your tax amount is like taxable income is 120,000. So this amount falls in the first bracket here. You see, it's 0 to 195,850. So the tax rate on that is 18%. So you'll take 120,000 times 18%. Okay, let me bring the calculator so that you can all follow. Okay, let's use this one. It's 120,000 times 18%. It's 21,600. Then from this amount, you will less your rebate. Remember, the rebate. Okay. Also, the rebate is determined by the age of the person as well. If you are under the age of 65, your rebate is 14,220. If you are between the age of 65 and 75, your rebate will be 22,014. And then if you are over the age of 75, your rebate is 24,615. So in this case, the rebate is 14,220. So it's 14,220. So 21,600 minus 14,220, 7,380. So which means if you earn 10,000 per month, your tax for the whole year is 7,380, which is 615 rands per month. That's the tax on 10,000. I'm not sure if you're all following now. All right. Okay, let's move forward. Okay. All right. Before I go to your questions as well, I received some one of the questions. There was a guy who was asking me that he was saying that he's got a company, but he's using his company's bank account to pay for his personal expenses. So you calculate your personal tax, remember the company also needs to pay its own tax, but you need to take out all your personal expenses from the business so that you can then transfer them to your personal account, to your personal tax calculation, so that you'll also be able to determine your own taxable income. I know that's not what I would advise you to do, because I would advise you to have, for example, have draw a salary every month, a fixed salary. But we all know that sometimes the seasons are not the same. Sometimes you make money, sometimes you don't make money. But then now I want to show you as to how you can record those expenses separately. But it's very important that every month you go through your business bank account, your bank statement. You need to understand each and every transaction from a bank statement, and then also identify whether this is personal or business. So anything that is personal, record it separately, so that you will maybe you will categorize that as your salary when you do your personal tax. Let me show you a simple spreadsheet on how you can do this. Okay, this is on Excel. I would advise you to do this on Excel. Okay, move this. All right, the first column, I would have maybe the date, and then here I will make this bigger. I will call this details, and then this will be amount. You can say amount paid, because remember, you're taking the amount money from the business. So every month, go through your bank statements. Let's say, because remember, we are working in 2020. So just please go back from last year in March up until February 2020, because that's what we'll be filing from September. They moved it to, from July. So September, it was supposed to be in July, but they moved it to September because of the COVID-19. So that's the period that you will be filing. So it's going to be from 1st of March 2019 until 28th February 2020. So, then, for example, maybe you were not drawing a salary, but you were using your bank account to pay for your personal expenses. Your business account to pay for your personal expenses. So this is what I need you to do. I need you to go back from March and do this exercise. Let's say maybe on the 3rd of March. Okay. Let me show you, for example. Let's set up the format of this column. Okay, I want you, once you've created the columns, I want you to highlight. You want you to highlight this from A, highlight the whole thing, and then go to Format, Cells. So we're going to change this column into a date format. Then to date. Let's choose this one where you start with a day, month, and a year. Okay, and then on the amount side, I want you to click on C, then maybe click on this comma, so that it will be an amount format. Okay, so let's say we are in March now. Let's say it's on the 3rd of March 2019. Maybe you paid rent from your rent. Maybe say your rent is 4,000, and then again maybe for argument's sake, on the 16th of March 19th, what did you do here? You bought clothes, not for promotional, but for yourself, maybe 2,000, and then on the 31st of March at month end, you did a withdrawal, maybe of 14,000. So let's say it's the same thing every month. So just do the whole exercise for the whole year, and then from there, maybe you've got once you've got everything, go to the last column and select this sum, so it will add up the totals for you. Then you press enter. So basically that's 20,000 per month. Let's say let's say for argument's sake, it's the same thing for the whole year, every month. So it's 20,000 times 12. That will be 240,000 for the whole year. That will be your taxable income. And remember, in this case, since you are claiming the expenses from the business, you will not be able to claim the expenses again on your personal capacity, because you've claimed them on the business side. so it will be double claim. So that SARS will not allow that. And remember the expenses, and in order for you to claim those expenses in the business, make sure that all the invoices are made out to the business. Otherwise, it will not be allowed as a claim. Yeah, okay. As I was saying, these are all the amounts that you use for personal expenses. And then let's say maybe on one month or in other month you put money into the business. So you're going to take this amount and deduct that amount that you've paid for. Let's say, for example, in 1 month the business did not have money. Maybe you put maybe 15,000. So you're going to deduct that 15,000. So then in that case, you will pay. You will declare the taxable income of 225,000 instead of 240, because whatever money that you've put in, it's more like a repayment of what you've used in the business. So then your tax will be calculated on 225. So let's work out the tax on that. Let me go back to the tax tables. All right. 225,000. We're looking at 2020, sorry, not 2019. 225,000, it's in this bracket here, 195 to 305,850. So it's 225,000. Remember, that's our taxable income. So the table says here is 26%. The tax will be 26% of the amount over 195,850. So any amount over 195,850, you will multiply that by 26%. So in other words, we'll take that 225 less 195,850. So for us to get the amount, it's it's 225,000. What's the amount? 195 minus 195,850 is 29,150. Then we don't stop there. Then it says plus this amount, 35,253 plus 35,253, 64,403. 64,403. Right. That's your tax amount. But remember, from the tax amount, you still need to deduct your tax rebate of, let's say this person is below the age of 65 years. So you'll still deduct 14,220 minus 14,220. So the tax for the whole year is 50,183. So that's your tax payable for the year. If you divide it by 12, it's 4,181. So it's easier. It makes your life easier if you pay this every month. Register for pay as you earn so that you can deduct this every month, so that you don't have a burden at year end where you have to pay this as a lump sum. Yeah. I don't know, if we are all clear. Let me look at the comments, because remember I asked for questions. I hope you are all following. Okay. I see Matoban is here as usual, and Harrison, welcome guys. Pumelele Jezili is also here. Okay, let's go to questions then. I received the question earlier on. Let me get the question. Let's see if I can get it. Okay. Pull it up here. The first question that I received was from Mr. Selby Bupape. He's saying, was actually checking out that SARS didn't pay people back any pay as you earn since 2018. So why are freelancers paying 25% if we're no longer going to claim it back, even if we might fall within the tax-free according to tax bracket and further? we treated worse than unemployed people. Just thought just thoughts I had today. Okay, so what he's saying is saying that he's working as a freelancer and he was paying 25% pays you and he never got it back. I don't know how he didn't get it back because remember, okay, in this case, what happened here is there was an arrangement called the tax directive. So his employer, or I would call him employer, for example, because he's registered for pay as you earn. Anyone who's registered for pay as you earn is called an employer. His employer was paying him maybe lump sum for gigs or for productions, but he got a tax directive from SARS. Tax directive is a rate that SARS gives you to deduct from whoever you are paying. He got a tax directive. Yeah, in his case, for example, they were deducting 25% of whatever amount. Whether it's 10,000, they deduct 25%. Whether it's 50,000, they deduct 25%. So it is your responsibility then, when you file that at year end, you file your tax, because in most cases when there's a tax directive, you'll find yourself in a situation that you've overpaid tax for the whole year. So that is when you will get your refund. So I don't know how come he didn't get the refund, because what needed to happen here is that he needed to file his personal tax, and then if he had paid more tax, then SARS would have refunded him. So yeah, SLB, if you haven't filed your tax, please contact me tomorrow. Then I'll advise you further on what to do. I hope you all understand. Like I said, there's a tax directive arrangement in his case. So the employer is deducting 25% of whatever amount is paid. As I've mentioned, whether it's 1,000 rand, they deduct 25%. Remember that 1,000 alone is below the tax threshold. So that is why I'm saying you might find that he overpaid tax. So that's when he filed his tax, including all other income. Then if he is in a position where he has overpaid, SARS will pay him whatever is due to him. That's what will happen in this case. And then I received another question as well from, I think it was from Kosana. Let me look for the question. Kosana is saying, Olamfui, please share more on depreciation of the expensive equipment that we buy, which we can't write off. What amounts may we write off, and which terms may we depreciate as musicians, as some are building home studios? Remember, last week I've said that if you buy assets, whether it be a motor vehicle or your musical instruments or your office furniture, you can claim that over the certain period. For example, a motor vehicle, you can claim it over the period of 5 years. Let's say you bought a vehicle for 100,000, which means every year for the next 5 years you will be able to claim 20,000. Say, for instance, at year end your taxable income is 40,000, and then your depreciation that for on that motor vehicle is 20,000. So instead of being taxed on the 40,000, you will be taxed on the 40,000 minus 20,000. So you'll be taxed on the 20,000. That's how these assets are helping you in order to claim. So, but there's I've got a list here which I'll drop a link below after this session, where you can see how many years each item is depreciated. Let me show you, for example. Okay, let me bring this in. He was asking about musical instruments specifically, so let me show him. Okay. So musical, yeah. So if this is in alphabetical order as well. So let's go to M. So as I've mentioned, musical instruments are depreciated over the period of 5 years. So if you buy a keyboard or you buy studio equipment, you can write that off over a period of 5 years against your taxable income. So it will save you tax as well. And then office equipment. Okay, let me show you something here. So this is the whole list. If If you buy furniture and fittings, you see it's over the period of 6 years. So you've got 6 years to write them off against your taxable income. So, and what else? Let's go to motor vehicles. Motors, vehicles. I don't know what they call it here. Then if you've got television equipment as well, you can write it off over the period of 4 years if it's for advertising. And what else that you guys normally use? Office equipment. Okay, let's go to software. Office, what's called software? Computer software. Let's go to computer software. Computer software. If you purchase the computer software, you can write it off over the period of 3 years. But if you've developed that software yourself, you can write it off. The cost for developing the software, you can write it off over the period of 5 years. All right. Okay, those are the only 2 questions I've received so far. Let's see if I've got any questions under the comments. I don't see other question here. Okay, let's see how it says. If I do a pay as you earn, do I also pay for the months where I didn't make money? No, that is why it's called pay as you earn. If you did not earn a salary that month, you don't pay pay as you earn in that month. Also, if you've paid yourself an amount below the tax threshold, let's say below 6,500 in that month, you don't pay any tax. That's why it's called pay as you earn. So it's according to those tax brackets that I showed you. Okay. Okay, where are the questions, guys? Okay, but someone is saying obviously you still have to file, but there will be no taxable income for that month. Correct. If you are filing and then you are below the tax threshold, there will be no tax. But as a business owner, you still have to file either way, and that's for personal. Remember, the company pays. There's no threshold. The company pays a flat rate of 28%, irrespective of the profit. Whether the profit is 1,000 rand, you will pay 28% of that amount. If it's 10,000, you will pay 28% of that amount. That's for the company, but for the individual, there's a tax threshold of 79,000. Where are the questions, guys? I guess you know it all now. All right, I'll give it 10 more minutes for questions if there are no further questions, then we'll call it a day. Ron Lutendo says, thank you so much for this info. You're welcome, sir. Thank you, Nkosana. Okay, I think I'm missing. There's a question that I'm missing from Matsuban. Let me check for. I heard you saying that SARS follows the money. Can you explain? What do you mean when you say SARS follows the money? Yeah, but then maybe you are referring to, let's say you're owing SARS money, and then they send you maybe a final demand and you're not acting. SARS has power to instruct your bank to deduct money from your account and pay it over to SARS. That's what happens. Remember, if you get a final demand, to avoid that, make sure you go to SARS and apply for payment, either payment arrangement, or maybe if you want to object the bill, then you can apply for what we call a suspension of payment while you are still busy preparing for an objection. So SARS will suspend you from paying until the outcome of your objection. But if you don't act, SARS can, like I said, can instruct the bank to deduct whatever money is available. If you owe, maybe let's say if you owe them 50,000 and maybe in your account there's 11,000, SARS can leave you with 1,000 rand on your account because you didn't make any arrangement. And this is asking from YouTube, saying, why is pay-as-you-earn important? As I've said, remember, it helps you at the end of the day. Remember, if you pay your pay-as-you-earn monthly, remember pay-as-you-earn, you pay it monthly. Let's say for the month of, where are we now? In June, you will have to pay your pay-as-you-earn before the 7th of July. So you pay your pay-as-you-earn before the 7th of the following month. If the 7th is on the weekend, you pay it on the last Friday. I mean, on the Friday before the 7th of the month. So by you paying your pay-as-you-earn, like you relieve yourself from paying a lump sum maybe when you file your tax return. Instead of paying 54,000, for example, you pay 4,000 every month. So it's better that way. But the employer has an obligation to register for pay-as-you-earn. If you are an employer, it's compulsory that you register for pay-as-you-earn, because you cannot pay your employees without deducting any tax if there's tax payable on it. Can you teach more on how artists should look at their contracts? Yeah, I'll have to get an attorney for this one. Yeah, we that can be arranged, but I'm not an attorney, so I can get somebody with the legal perspective to give advice. I hope Matsuban is listening. All right. Okay, 5 more minutes, then we call it a day. Can you also explain the consequences of not paying tax over a period of time? Yeah. Say you've been trading for 10 years and you have not submitted to tax, or maybe you filed but you were not honest, and then you've underpaid tax, but you are living this luxury life. So SARS has a legal obligation, legal power to come to you for an audit. And SARS can go back for a period of up to 5 years. That's why it's important to keep your records for a period of 5 years. So because what will happen there, if, for example, you've been cheating SARS, or maybe you have not paid anything, SARS can penalize you up to 200%. We all know that the normal percentage is up to 100%, but SARS can do it, can penalize you up to 200%. And over and above that, the SARS can charge you for understatement of penalties. So SARS can bankrupt you. So those are the consequences. You'll end up selling your house, selling your cars in order to pay the bill which you can't even afford. So it's important that you become honest. If you owe a lot of money, make an arrangement with SARS. Then also it is what we call a debt compromise. Say, for example, you owe SARS maybe 200,000, maybe that time you don't have that money. So you will have to prove to SARS that you cannot afford it. Then you make SARS an offer. Maybe out of the 200,000, say maybe I can only pay 50,000. So there is that type of arrangement as well. That we call a debt compromise. But in order for them to approve you, you need to be honest, as honest as possible, because you can't say you can only pay 50,000, but you only to find out you've got assets that you can sell to pay SARS. So that will make them to reject your offer. Any other questions? Let me see if I'm missing any question here. Sia is asking that I summarize my lesson so far. Okay, I will do that before we leave. Okay, let me rather go there. Right, let me go back further. Yeah, remember we spoke about the steps. The first step, which is on how to calculate tax, is that you have to calculate your gross income. The gross income is all your income, and that income includes income from gigs, rehearsal fee. If you are working for a church, that is also taxable. Then if you earn royalties from your songwriting, that's also taxable. And then say you've got a property that you are renting it out, maybe you've got a room that you are renting out, that rental income is also taxable. Interest received from the money that you earn from the bank, but there's a limit there. And then digital sales, if you are selling your music through iTunes, Amazon, that is also taxable. And then your consulting fees. Then from there, you will deduct your expenses, which is step 2. And then which expenses are tax deductible. Like I said, all the basic expenses necessary to run the business are general taxable. So anything that is business related is taxable, like your telephone is taxable. If you are printing, it's taxable. If you are paying a lawyer, it's deductible. And then if for your petrol as well, it's also deductible. So you can claim those against your income. Any business related expense. But remember that these expenses should be incurred or spent in the production of income in order for them to be allowed as a deduction. So that expense must be related to income. For example, when you travel to a gig, the fuel that you are incurring is related to the gig fee that you're going to earn. So that is why you are able to claim that. But if you are taking your friends to maybe to dinner, you will not receive any other income from that. Then that's why that is not allowed as a deduction. But if you are taking your client to dinner, remember your client will give you gigs. Then there is a relationship between the income and the expense. So that is why that expense is allowable as a deduction. Hence, it says here it should be incurred or spent in the production of income. Anything that you spend in order to get the income, then you can claim it. And then what are those expenses? Like I said, it's your legal fee. Wear and tear, it's referring to that depreciation. Like remember, I mentioned that if you have a car or assets like your musical instrument, you can claim that over a certain period of time. And then your accounting fees, the interest on loan as well. Say you finance a vehicle or you finance the keyboard, whatever interest that they've charged you, you can also claim that. Not the whole installment, the interest portion of that installment. You can claim that also against your taxable income. Yeah, remember step 1 is your gross income. Step 2, you less your deductions. Step 3 is your taxable income. Then from the taxable income, you calculate the tax amount using those tax tables. Then from the tax tables, you deduct your rebates. Then from there, you get your tax payable or your tax refundable. And then the rebates, as I've said, if you are under the age of 65, it's 14,220. If you are between the age of 65 and 75, the rebates is 22,014. If you are over 75 years, it's 24,615. Yeah, so let's recap again. Step 1, remember you calculate your gross income, which is the income, the money coming in, less your deductions, money coming out, which are your expenses that you've incurred during the year. Then if you take your gross income less your deductions, you get to step 3, which is your taxable income. Then from the taxable income, you calculate your tax amount. And remember, I said the the tax threshold is 79,000. If your taxable income as an individual is less than that threshold, you do not pay any tax. But if it's a company, you pay 28%, irrespective of the taxable income. Whether it's 1,000 rand or 1 million, you pay a flat 28%, and the company has no rebates, so it pays 28%. And if you have made a loss, I forgot to mention this. If you have made a loss, you don't pay tax as well, but you carry forward that loss. Let's say this year you make a loss of 100,000, and then next year you make a profit of 150,000. Instead of being taxed on the 150,000, you will be taxed on the 150,000 minus the loss that you've carried forward from last year of 100,000. So you'll pay tax on the 50,000. So that's how your losses help you for taxes. If you made a loss, doesn't mean that you've made a loss and you cannot do anything about it. You carry those losses forward to the following year, up to the following year, so that you can use it to reduce your taxable income. And then for individuals, remember, there's what we call ring fenced. SARS can limit you to carry your losses forward up to a period of 5 years, but there's a test that they do to check whether those losses can be limited or not. Yeah, but then that's another topic for another day. Okay, let's look at the questions again. I think I've made myself clear now. I'm sure you know by now how to calculate tax. Let's look at this question. It says, what if, Mhlom Somi says, what if my employees earn less than 4,300 a month? Do I only pay for the income excluding employees? I'm not sure if I understand the question. Okay, for those employees, let's say that employee that earns 4,300, you will not deduct any pays you earn from there because it's below the threshold. Remember, the threshold is 6,500 a month. So anything less than 6,500 rand, you do not pay as you earn. But the only thing that you will pay from this amount is the UIF, which is 1% of this amount. In this instance, it's going to be 43 rand. You will only deduct 43 rand, and you will also contribute your 1% as well. So it's going to be 43 rand plus 43 rand. That's what you will pay for UIF, but you will pay nothing for pay as you earn. And then you're saying, do I only pay for the income excluding employees? And then also, this you'll also claim this 4,300 that you are paying to an employee as a deduction for taxable income, because it's also an expense to your business. So you will deduct that from the income that you have. Let's say your gross income is 20,000. So you'll deduct the 4,300 from it. So you'll only pay tax on the 20,000 minus 4,300. So that will be your expense for the business. That's how it also benefits you as a business owner. Matsubane Swadisha is asking, can you clarify the use of cash or the handling of cash instead of banking the money? I build a house from that cash. I am thinking maybe an artist receive cash and use to build a house, even if the cash received over a period of time. What is the tax liability? What are the tax liability or consequences? Remember, when you build something from cash, it means you've made a profit. So let's say you build a house for 500,000 or 1 million cash. If you build it cash, it means you've made a profit of that 1 million. Yeah, because you wouldn't have had that cash if you didn't make a profit. So which means you are liable for the tax on that 1 million. Those are the effects. So that's why it's important to bank the money. Even if you didn't bank your money, remember the property is registered at the deeds office. So SARS can run a deed search and they can see that you own a house of 700,000. So then they can call you for an audit, and that's where you'll have to explain where you got the money from. And then you may also be liable, like I said, for 200% penalties for having not disclosed that money, and also for understatement of penalties. So you'll end up losing that house if you're not complying. Leroy Kumal is asking why when I go to SARS to file my returns for company, they want an auditor to do my books first. Like I said, if you've been trading for the whole year, remember, you need to, that's why they want the auditor to do your books first. If you've got a company, the company needs to have financial statements. So financial statements, what we do is we go through, we capture your bank statements, all the income and all the expenses, and that will give you income statement. And that income statement, remember, it's going to be your income less all the expenses. Then we'll have a profit. So that profit is the amount that will be taxable. Let's say maybe for example, you for the whole year you've made an income of 400,000, and your expenses, including depreciation, of course, is 300,000. So your profit will be 100,000. So the 100,000 will be used to calculate 28% tax, of which you will pay 28,000 tax. So that's why they want an accountant or an auditor to do your books, in order for the accountant to calculate what is taxable. You see, and then on the tax return as well, you need to fill in those amounts on the tax returns. So that's why it's important. If you don't have financials, you won't know what was your expense. For example, your telephone for the whole year, because on the form there's a column, for example, for salaries and wages. So you need to know how much in total for salaries and wages. Then you put that amount in there. How much was your depreciation? How much was your income? That's why you need the financials. Without the financial statements, you will not have those figures. Say we have more than 80,000 at step 3. Will that be taxed, or will you only determine if you will be taxed after you less rebate? If you have 80,000, let me show you. You will pay tax, but it won't be much. Where are those tax tables? Okay. Let me grab the tax tables. All right, saying 80,000. So take 80,000. I don't know why it keeps disconnecting now. Just Bear with me. So I have to reconnect again. Okay, it's fine. Let me go to open the text table from the notes. Go to the last page. Yeah. If you look here, 80,000 is still within this bracket. So if you take 80,000 times 18%, let me work it out for you. 18,000 times 18% is 3,240. Where is it? $80,000, sorry, times 18% is 14,400, sorry. 14,400 minus the rebate of 14,220. So you'll only be liable to pay tax of 180 rands. That's for the whole year. Yeah. So it's still low, but you will still need to pay the 180 respective of the amount. Okay. Mark he says, Aaron, you want to answer me. Where's your question? Let me look for your question. Okay, let me look for your question here. Because I did not see your question. Can you paste your question below? Because I can't find your question. There's lots of comments here. Okay, can I say from legal point of view, SARS has a lot of powers to probe you if you feel you are not compliant or not honest. The law gives them a lot of access to our financial and personal living to check whether your lifestyle is in line with your returns. Yes, that's correct. That's why there's audits called like lifestyle audits. If, for example, you've been paying SARS maybe 3,000 a year, but you're driving fancy cars, so SARS can come and audit you to check where you got the money from. Let me see if I didn't miss any question here. Okay. I'm just waiting for my host to post the question again so that I can answer a question. Hey, Pastor Makaba, I see you are here. Welcome. Sianda Zulu, thanks for watching. Hey, Koli, thanks for watching. And Sia Dikana, thanks again for coming back. Selby, I hope you have been answered. Thanks for joining again. Hendrik Munyeki, thank you for joining. Okay. Looks like the question is not coming. Then we can call it a day. Okay, we are left with 2 minutes, then we can call it a day. Tutu Makova, thanks for watching. All right, looks like there are no more further questions. Okay, it's just have one more minute, then we can close. Okay, looks like there are no other questions. Thank you so much for coming through. I will announce during the course of the week on about next week, on what will happen next week. So yeah, thank you, and do join us again tomorrow on the Producers Talk. Yeah, at 9:30 on the Producers Talk page and also on YouTube. And yeah, thank you for coming. Thank you. Enjoy your evening. Good night.